Who is he? He is Sam Bankman-Fried, and he is currently a hot topic among investors all over the world. What was he actually doing? Bankman-Fried, also known as SBF, famously became the richest person in crypto before the age of 30. He was a co-founder and former CEO of FTX, a cryptocurrency derivatives exchange. In October 2022, his net worth was around $16 billion, mostly comprised of his ownership in FTX and a share of FTT tokens. He was a passionate supporter of effective altruism, a selfless concern for the well-being of others. He is outspoken about his mission to make as much money as possible in order to eventually give it all away, a philosophy called earning to give. He was also famous for donating millions to charitable and political causes with pledges for subsequent gifts. But right now, he's a traitor, a cheater who has sunk many people's investments. How did he do this? Is there a master plan behind? Let's see. Bankman-Fried was born in 1992 in California to two law professors at Stanford Law School. Both of his parents subscribed to philosophy of utilitarianism. He has a younger brother, and they were raised by their parents with utilitarian ideas. Growing up, Bankman-Fried hated school, finding it boring and overly structured. He attended the Canada-USA math camp over the summers in high school, which provided the intellectual challenge he needed. He graduated from MIT in 2014 with a degree in physics and a minor in mathematics. He remains dismissive of formal education, noting that nothing he learned in school ended up being useful in his personal life. After his graduation from MIT, Bankman-Fried was a trader at Jane Street, a global liquidity provider and trading firm. In September 2017, he quit Jane Street Capital, toying with the idea of setting up his own cryptocurrency trading firm. He knew little about crypto at that time, but recognized its enormous potential. In late 2017, Bitcoin was trading about 30% higher in Korea and 10% higher in Tokyo compared to the US. Demand for crypto was massive in those countries, but international trading last made selling foreign-held Bitcoin difficult. That November, Bankman-Fried and his college fraternity brother Gary Wang created Alameda Research, a firm that developed a prototype for a crypto trading platform. Alameda first focused on profiting from the Japanese Bitcoin premium using a strategy called arbitrage trading. This strategy exploits the price difference between identical assets in different markets by buying at a lower price from one exchange and selling it higher in another. They made about $20 million in first few months, and the company continues to be successful as a principal trading firm. Over the next 2 years, Bankman-Fried and Wang became frustrated with the offshore exchanges they were trading on, noticing a lack of customer safety nets, poor infrastructure, and bad management. Bankman-Fried and Wang were inspired to start their own crypto exchange platform with more trading options and better security. Bankman-Fried decided to move to Hong Kong in 2018 due to the prominence of cryptocurrency and cryptocurrency-related events in the area. In April 2019, he founded FTX, a cryptocurrency derivatives exchange, and it grew rapidly. It was recently valued at $32 billion. The son of Stanford University professor, who was known to play the video game League of Legends during the meetings, Bankman-Fried attracted investments from the highest echelons of Silicon Valley. The company thrived, and he eventually moved its headquarters from Hong Kong to the Bahamas, with the advent of running the company in a place with fewer restrictions than Hong Kong. Up until last week, Bankman-Fried was seen as a white knight for the industry. Whenever the crypto industry had one of its crises, Bankman-Fried was the person likely to fly in with a rescue plan. But in November 2022, Bankman-Fried resigned as CEO of FTX concurrently with the filing of Chapter 11 bankruptcy for the company. He also filed bankruptcy for Alameda Research on the same day. FTX failure started after the cryptocurrency news outlet CoinDesk published a story based on a leaked balance sheet from Alameda Research. The story found that the relationship between FTX and Alameda Research was deeper and more intervened than previously known, including that FTX was lending large quantities of its own token FTT to Alameda to help build up cash. It sparked mass withdrawals from FTX, causing the crypto firm to experience a very old financial problem, a bank run. According to Wall Street Journal, Sam Bankman-Fried used an old trick to make more money on his crypto exchange FTX. He allegedly bought crypto tokens before they were listed on the platform. FTX trading firm Alameda Research bought nearly 60 Ethereum blockchain-based tokens before the company's own clients could buy and sell them. Knowledge that an asset like a token or stock is going to be listed means that traders can make money by buying them in advance and selling them soon after. The blockchain, which is digital ledger that can be viewed by everyone, showed that Alameda purchased the tokens before the listings. Now FTX faces a shortfall of between $1 billion to $2 billion. Bankman-Fried had been the subject of some criticism before FTX collapsed. While he largely operated FTX out of US jurisdiction from his headquarters in the Bahamas, Bankman-Fried was increasingly vocal about the need for more regulation of the cryptocurrency industry. Many supporters of cryptocurrency opposes the government oversights. Now FTX collapse may have helped make the case for stricter regulation.